If you're new to trading and you're failing to stay consistent and profitable within the market, this video is for you. I'll be breaking down how I made over 700% in 2025 on one trade in XRP. Now, this applies for any market that you trade, but I'll be going over the crypto market. Now, what I'll be going over is a top-down analysis, a breakdown exactly step by step, what I look at, what my mindset is, what I'm thinking, and when I will execute. Now, the very first thing what you want to pay attention to is going on the weekly time frame. The weekly time frame holds a lot of value. Now, I'm going to avoid all this unnecessary noise down here and look at where we are in the market. And what we can see is price comes up and then comes back down, and then we get another sweep of liquidity. Similarly to how we had a sweep of liquidity down here, what happens afterwards? We come back down. Now we had another sweep of liquidity down here, and what happens afterwards? We come back down. Now the most important thing to pay attention to is your dealing ranges. And these are basically your swing high and your swing low points. Now this applies on the weekly, the daily, the 4 hour, the 1 hour, etc., etc. So what we can see is a swing high down here and a swing low down here. So I'm going to mark on my dealing range. This is your dealing range low, and this is your dealing range high. Now this is known as your premium side of the dealing range, and this is known as your discount side of the dealing range. Essentially what you want to do is you want to be shorting positions in the premium side of the dealing range, and you want to be longing positions in the discount side of the dealing range. Now, given that we are in the premium side of the dealing range, we want to be looking for short opportunities. That's your first indication. Your second indication is that we've had a sweep of liquidity down here. And normally what happens after a sweep of liquidity is we're expecting a pullback. And that pullback should pull back into a specific area in the discount side of the dealing range for then to take a long position. Now that means when price is pulling back, we can look for entries for shorts in this area. And that's exactly what I did. So now we've identified on the weekly time frame our dealing range. We can also mark on these areas down here. So that's your low, that's your high. This is your sweep of liquidity down here. So we can also mark that on like so. Now jumping onto daily time frame, what we can see if we just zoom right in, when we got the sweep of liquidity, let's see what happened. Now price comes down aggressively. We have another retracement back up into a fair value gap. I won't go into the details of what a fair value gap is, but you can understand that by looking at the videos that I've posted on my channel. Price comes into a fair value gap and we continue going lower. Now what we can see down here is we're trending downwards, and that's what we can see happening right now on price action. So this is your indication that we are in bearish order flow. This is bearish order flow and this is your bullish order flow. So essentially we confirm that we're in bearish order flow, therefore we should be taking entries as price comes back up and creates another lower high. So that's essentially what we are looking for. We can see we have aggressive moves to the downside, retracements back up. Aggressive moves to the downside, retracements back up. And we are tapping into key areas as we move to the upside to take positions to the downside. Now, what we want to look at down here is where are we looking to take entries? What we want to now identify is your dealing range on the daily time frame. So we want to look for your swing high and your swing low points. So I took a short position. So where we want to be looking is where's your swing high? Down here. So we can mark that on as your swing high. And where is your swing low? We've got a swing low down here. And if I use the bar replay tool to go back just a bit more, so we want to see price come into the premium side of this dealing range on the daily time frame. Price will come up into a key area. We will look for a position to take to the downside. So we want to be looking for shorts in the premium side of the dealing range, not in the discount side. Given that we've identified this dealing range, we can now drop onto the lower time frame. So as I mentioned to you, we're already in bearish order flow. Prices come into the premium side of the dealing range on the higher time frame. Now what we want to be looking on the lower time frame on the 4-hour and the daily is we want to see price retrace back into a key area and we can begin to take shorts. So let's mark on all of the key PDAs. So we want to look for fair value gaps and order blocks. So what we can see is we have a fair value gap down here, and that's also paired with a fair value gap on the daily time frame. So we can actually just extend that, make that bigger. You've got a fair value gap down here. Coming back onto the 4-hour, we can refine that fair value gap and add another one within this area just down here. So we know we want to see price come into this area. We also have an order block resting above down here. So we can mark that on with a order block. As price comes back up, we can use the replay tool to see how price moves and comes back up aggressively. So we've tapped right into this order block down here. Now, this doesn't mean you want to take your entry exactly off this order block. What you want to see now is confirmation, because essentially what you can see down here is bullish order flow. What you want to begin to see is confirmation. Price is not going to continue the bullish order flow, and we now continue with the bearish order flow to the downside. So essentially what we want to be looking for is something similar to this. And this is where you will be looking to take your entries. So on the 4-hour time frame, we can continue playing price a bit more. And what we can see price has officially began to create bearish order flow down here. Now, this is where we want to be looking for our entries. Now, once we've identified it earlier on, so number one, we had a rejection of the order block. Number two, we want confirmation that price is now going to change to a bearish order flow. We can drop on the 1-hour time frame, and this can also be your execution time frame. I'm going to remove the background on this to avoid confusion. So what we can see is on the 1-hour time frame, we had this sweep into the order block, failed to take out the highs down here, and we continued moving lower. We had a clear break of market structure down here, aggressive move to the downside, retracement back up into this area, and another aggressive move to the downside. Now, I wouldn't be taking an entry down here. This is your higher risk entry, and I will be taking a confirmation entry, which will be down here, which I'll show you in a second. However, if you wanted to take a higher risk entry, you can see that we have a fair value gap down here. So you can place an entry as price approaches into this region on the 1-hour time frame. If you wanted to go lower, you can, but I prefer to stay on the higher time frame, and you can have your stop loss above the swing highs. Now, the way I took my entry was once we had confirmation once, twice, price comes back down again. I was looking for the retracement back up, and we also had low resistance highs down here, which I wanted to see get swept. So what we can identify for the entry that I took was we had a fair value gap resting just down here, and I had my entry ready at the midpoint of the fair value gap, and I had my stop loss just the highs of this down here, and you can have it slightly above this high down here, and if you wanted to, you can keep it right above down here if there's more of a swing trade for you. So I had my stop loss just above down here. Zooming out on the 4-hour time frame, so what we want to also identify is where are you targeting. What we can see is price is likely in a creation of a market maker sell model, and essentially what that means is we have this original consolidation point and price comes up, and as price comes up we begin to reverse. So your targets want to be this area down here. These are the lows that you want to target, and that will be a completion of your market maker sell model. So essentially we'll take our entry, and as we move down, as we take out liquidity on the way down, we can begin to chop and take some profit as we move down. So let's see how price played out. We'll continue playing, and there we go. And our take profit has been struck very nicely, and that's a completion of a market maker sell model. Now that's a very, very simplified way of how I take my entries using the weekly, daily, 4-hour and the 1-hour time frame. I don't go into the 15-minute or the 30-minute or even the 5-minute. Now, if you're new to this channel, I trade crypto and also trade Forex using the ICT strategy. If you like these types of videos, consider subscribing, hit that like button, share and comment, and I'll see you in the next video.